When we think about building wealth, we hit a mental wall. The stock market feels unpredictable, and worrying about a sudden crash is exhausting. So we end up keeping our hard-earned cash sitting in a standard everyday bank account, where it barely earns enough interest to keep up with the rising cost of groceries. But there is a middle ground. The government has designed 5 specialized accounts. Think of them as distinct safety vaults. They are specifically built to be much more secure than the open market, while offering significantly higher returns than your everyday savings account. To use these vaults, you only have to agree to one condition: a lock-in period. You simply commit to leaving your money inside the vault, untouched, for a specific number of years. This lock-in period is a helpful trade for both sides. By agreeing not to withdraw your cash, you provide the government with stable funds. In exchange, as you can see by this steady upward line of interest, they guarantee your money will grow at a set rate, protected from the daily swings of the stock market. Let's look at the first vault, the National Savings Certificate, or NSC. If you are currently using standard fixed deposits at your bank to park your money for a few years, this is a direct upgrade. The NSC requires a 5-year lock-in. Because you commit to that time frame, the government gives you a higher interest rate, currently around 7.7%, with a level of safety that meets or exceeds a standard bank deposit. Our second vault is the Senior Citizen Savings Scheme. This one is built specifically for individuals over 60, though retired military personnel can access it starting at age 50. You deposit a lump sum, locking it away for 5 years. That deposit creates a steady stream of smaller, regular payouts. With a high 8.2% return, it provides a reliable way to cover monthly expenses. By utilizing these first 2 vaults, you are choosing tools designed to help your savings keep pace with the rising cost of living. While standard bank interest often struggles to keep up with inflation, these rates are specifically calculated to help protect your purchasing power over the next 5 years. The third vault is the Sukanya Samriddhi Yojana. If you are a parent to a young girl under the age of 10, this is widely considered one of the most effective wealth-building tools the government offers. This comparative bar chart shows it earns an 8.2% return, entirely tax-exempt. Growth stays for your daughter's future. These funds are secured for 21 years, or until she turns 18 and marries. Early access is only permitted for serious medical emergencies. If you don't meet the requirements for that account, perhaps you are saving for a son or building your own long-term fund, you can use the fourth vault, the Public Provident Fund. The Public Provident Fund requires a 15-year commitment. It currently offers a stable 7.1% return, and just like the previous vault, the interest you earn is entirely tax-free. The real strength here is the tax-free growth. When the government doesn't take a cut of your yearly gains, your money compounds much faster. Over 15 or 20 years, that mathematical edge can turn regular, modest deposits into a very significant sum. Our fifth and final vault is the National Pension System. This is built specifically to help you work towards financial independence in your old age. Linked partially to the stock market, it carries risk, but expected returns reach 10 to 12%. As this timeline slider moves from young to old, it automatically takes market risks early, then smoothly transitions into stable, fixed-return investments near retirement to protect your wealth. You generally cannot withdraw this money until you hit age 60. While that might seem restrictive, it acts as a practical safeguard. It prevents you from accidentally spending your retirement fund on short-term needs today, ensuring the money is actually there when you stop working. Real retirement planning is about more than just interest rates. It's about using a structure that protects your future savings from your present-day expenses. You do not need to be a finance expert to grow your money. You just need to identify which milestone you are saving for and choose the vault that matches it. To recap, for a daughter's future, look at the SSY. For senior citizens needing income, it's the SCSS. For long-term tax-free savings, the PPF. For a 5-year goal, the NSC. And for retirement planning, the NPS. These tools are highly accessible. You can walk into almost any local post office or authorized bank today and ask to open the specific account that fits your needs. Take a moment to decide which vault fits your life right now. And if you have friends or family members approaching these milestones, share this video with them so they can see the options available to them. Building lasting wealth isn't about taking huge gambles. It's about consistently using the secure, purpose-built tools that are already waiting for you.